Okay, so hey everyone, I am Don Marion. I am a real estate investor in the Atlanta, Georgia market and the manager of Alpha Dog Investments, aka Alpha Dog Capital. So what I want to do on my live streaming videos that I'll be doing from this point forward is taking real estate investing topics and talking about them with you. So this is my first YouTube live. I do like making educational videos, but I also enjoy the interaction that I get when I give a live presentation. So haven't done this on YouTube yet. So this is my kicking this off. So the key word today is the SEC. Now, the title of this and most of my videos will be Ask Me Any Real Estate Related Question. And then I'll have a keyword to go along with it to get the conversation started. And today it is the SEC. Now, when I see SEC trending, if I'm on another platform, X, for example, and see that SEC is trending like I did earlier, I always check it because I am interested in the Securities and Exchange Commission and what's going on, any news in the world of securities. But it was about basketball. So I don't really check SEC because of basketball. I check it from a real estate investing perspective because I do manage a fund that is regulated by the Securities and Exchange Commission. And I want to go over some of those rules because if you're new to the world of real estate investing, or you're new to the world of investing passively in real estate, I want to explain a few concepts to you. Now, this is not a solicitation to invest in my fund. I'm not trying to buy or sell, get you to buy or sell securities. This is educational in nature. So, just keep that in mind as I talk about this. So basically, for example, a fund can be a 506B fund. And there are certain rules and regulations that the Securities and Exchange Commission has about investing in a 506B fund. Another popular fund is a 506C fund. And those are the two really big ones. And these are the ones that most private placements are. So a 506B or a 506C. Now, let's start with the 506C. A 506C fund is regulated by the Securities and Exchange Commission and prohibits fund managers or syndicators, those private placements. There's all kinds of technical terms we could use. But anyway, anyone who runs a fund or syndication that's a 506C fund can only take in capital from accredited investors. And so what is an accredited investor? So the SEC has clear guidelines about this. And an accredited investor is somebody who has a net worth of $1 million or more. Now, there's also a stipulation in that a person's primary residence cannot be used to calculate that net worth. So if someone owns $1 million house and has no mortgage on it, certainly on their own personal balance sheet, they have a net worth, at least in their home, the equity is $1 million. But the SEC does not disqualifies that particular asset from calculating someone's net worth for the purpose of being an accredited investor. So in short, an accredited investor is somebody that has a net worth of $1 million or more, not including their primary residence, or the other qualification can be an income approach. Someone who earns $200,000 a year or more and is likely to continue with that income at 200 or above for the foreseeable future. Or it could be a married couple. They can combine their income and qualify with an annual income of $300,000 together. So anyway, an accredited investor is in one of those is defined by one of those two tests for the most part. There may be other ways that somebody could become an accredited investor, but I think for 99% of the people that get qualified, it's the net worth or the income that qualifies them. And so the manager of a 506c fund cannot take in capital from anyone unless they verify that the investor is an accredited investor according to the Securities and Exchange Commission rules. And so, so that is a prohibition on that type of fund. But the advantage of that fund is that they can advertise and market and solicit basically the general public to invest, but only they get weeded out. Non-accredited investors get weeded out and can't even participate in those funds. And anyway, there's a lot that could be said about that. A 506b fund, on the other hand, can take in capital from a non-accredited investor. Now, the manager of a fund like that needs to be careful and needs to ask very good questions of someone they know that would like to invest in the fund. And they need to make sure, the fund manager needs to make sure that this person, is financially able to participate in the fund according to, whatever criteria there might be. One of the prohibitions with a 506b fund is that that fund cannot publicly advertise or solicit the general public for investors to buy securities in the fund. So this is more geared towards an investment fund manager who can raise capital from family and friends and personal relationships and networks of relationships that they have, because they're not advertising, they're not publicly stating, hey, I have a fund, invest in my fund. But they can take in investment capital from non-accredited investors. So the way I look at this is not a hard and fast rule, but a general guideline. A manager of a 506b fund doesn't want to take in capital from somebody that cannot afford to, well, let's say to lose all the capital, but to be more realistic, if it's a legitimate investment opportunity that looks promising, the investor can't be someone who may need that capital back anytime they think they want it back. So funds are usually locked up for 3 to 5 years, could be longer in some of these funds. So this is capital that somebody has maybe locked away into a retirement account, for example, a self-directed retirement account. And by the way, I recently posted a video, did an interview with Paul Herbis of Equity Trust. I'm not saying the Equity Trust. Oh, wow. The full name of his company. But anyway, he's an expert on self-directed IRAs, and their company is a custodian for investors so that they can qualify using retirement funds in private placements and in these different funds I'm talking about, 506Bs, 506Cs. But getting back to the 506B fund, the investors that, the fund managers that taking capital from non-accredited investors need to make sure that the investor is qualified. It's not their life savings. It's not money that they need back because of an emergency. It's somebody that's done well in their life. They maybe just don't quite meet the criteria to be an accredited investor, but they're probably people that are on the path to becoming an accredited investor in the next few years. And that's kind of the way I look at it. Or maybe they're close and maybe they can't quite get to the accredited investor status, but they're doing very well, and they have money in a retirement account that they won't need, or they have savings, or they have their personal funds in the stock market, and they want to diversify some of that money away from the stock market into alternative assets, and real estate being the number one alternative asset. So that's what these funds are for. It's for people that have the wealth that don't need the money. They basically have to put it one way, is they have money burning a hole in their pocket, and they want to deploy it into something to, one, diversify where their money is now. If 100% of their money is in the stock market, it really makes sense to diversify 5, 10%, whatever it might be, and get into alternatives, get into real estate. And it's also designed for investors that want to be in real estate and get that diversification, but they don't want to actively manage projects. They don't want to have to make the decisions of which properties to buy and then make decisions. Is this a good rental, or is this something I could fix up and sell for a profit, a quick profit? Or is it something I should hold on to for a couple of years, let it grow in value and then resell? Or is it something that I'm going to hold, for the next 5, 10, 15 years as a rental property? There's a lot of people that don't really want to make that decision. They're not qualified. They're great at what they do, maybe an electrical engineer, for example, or somebody that's in IT work, make a lot of money. They're really good at what they do, but they know that they don't have the expertise and they don't have the time to really take a deep dive into how to select real estate properties to purchase and how to manage them and how to make them successful, profitable projects. So these funds that are geared towards real estate assets are great opportunities for this type of investor, and that's why these funds exist. So anyway, that's today's topic: Securities and Exchange Commission and real estate investing. When you see me live on YouTube, most of the time when I'm logged in as Alpha Dog Investments, Alpha Dog Capital, doing a live video, I'm going to post Ask Me Any Real Estate Investment Related question, or any real estate related question. And so I've been doing this for 18 years. Prior to getting into real estate investing full time, I was in the nonprofit world for 26 years. During the great financial crisis of 2007 and 8, when housing prices crashed, I needed to make a big change in my life, and I had to leave the nonprofit world, where donations to the nonprofit were going down because our donors were in financial trouble themselves. I saw that I needed to make a big change in my life and a big change in my career. And I studied real estate investing, and I took some courses. My brain really opened up when I read Rich Dad, Poor Dad by Robert Kiyosaki, and got the cash flow game. I played it with my wife and kids at home, and it really opened my mind to think in a new way about finances, about money, about investing, and that I had never really thought about before. And I've moved on, using those strategies and that understanding, that learning, but that really became the first step and the foundation to this whole world that I've been in for the last 18 years. So I run a property management company with my business partner. We manage over 100 doors. Maybe we're doing 120 right now. We were doing 150. Some of our landlord investors sold and cashed out in the last 12 months or so. So we're about 110, 120 properties, I would guess, right now. We've been doing this for, well, as long as I've been in Atlanta, for the last 15 years. My business partner started the property management company before I moved here. And when we became business partners, we began running that company together. We also do home sales. I am a licensed broker with the RE/MAX franchise in Metro Atlanta, so I can sell homes and represent clients that way. But what I really like doing is being in the real estate investment space, both as an agent and property manager, helping my landlords and investors to find properties and to manage their assets on their behalf, or my own company buys properties, owns some rentals. We like buying single family houses where we can add a lot of value because of deferred maintenance and disrepair that's on the property. So we buy properties at a price that makes sense for us to fix them up, force the appreciation, force the value of these properties to go up significantly in a relatively short period of time, let's say 4 to 6 months. And in most cases, we like to resell them. We get a nice profit event. We can share the profits with investors that are part of our group, and then we redeploy that capital and do it all over again. And in some cases, we hold houses as rental properties. So anyway, this is what I do. I love teaching. I'm restarting a Meetup Group that I ran for years live, and now I'll be doing that on a Zoom call. So you know what? I'm going to leave a link in the description after I shut down this live. I'll go into the description and add the link to the meetup group that we have. And so if you're interested in participating in our meetups, we do this once a month. There are other investors on the call, and the people that are on the call, some of them don't have any experience in real estate investing. It ranges from people that, like where I was 18 years ago, first learning about real estate investing opportunities and trying to find what is their niche and how do they want to invest, to people that are very experienced and very active in real estate investing, and they're doing deals, multiple deals every year. Some fairly high volume, others, lower volume, but they're people that are actively doing it. They may be full-time. Some of the folks that are highly experienced may be doing it full-time. They also may be licensed agents or not, but they, for the most part, are kind of full-time, managing their portfolios, buying and selling real estate or whatever. And in other cases, some of our highly experienced investors that participate in our meetup groups are people that have a lot of experience. They own some rental properties. They bought and sold properties. They know how to evaluate real estate deals, and they're always looking to learn and sharpen their skills. But it's not like what they do. It's not their primary income, but it's really a supplement to their income, and it's really a path for them to create wealth over and above working their full-time job. So anyway, lots of variety of where people are in their real estate investing journey that come to our meetup group. So that's going to be in Zoom. It's going to be 2 weeks. We're going to do it Tuesday. The next one is Tuesday, December. I'm looking it up. That's why I'm talking like this. Tuesday, December 16th at 5 p.m. Eastern time. So anyway, if that interests you at all, check the link in the description and log on to the call. Love to see you there. So that's it for now. Look for these live broadcasts from time to time. I'm going to try to do this regularly. I think I get a lot of questions when I have a group with me, and that tunes into my content, and I'd be happy to talk to you, field questions, and talk real estate, anything real estate related. So if you ever have any real estate related question, feel free to reach out to me anytime.